Good morning, everybody. We've got a higher trade in the grain markets again here early on Thursday morning. It is 6:31 a.m. Central Time. December corn futures up 3 3/4 at 392.5. November soybeans are up 10 1/4 at 1061 1/4. December Chicago wheat up 6 at 613.5. December Kansas City wheat up 4 3/4 at 549 1/4. December spring wheat up 1 1/4 at 550.5. So we have some new multi-month highs here in all of these markets, really, or most of them. U.S. ethanol production continues to kind of stagnate here. EIA released its weekly report yesterday. We had weekly output of 923,000 barrels per day. That was up 4.8% on the week, but still 4.1% versus the same week last year. The 4-week average for ethanol production, 909,000 barrels per day. That's down 6% versus the same week last year. Gasoline demand still running about 6% versus the same week last year. So despite the massive recovery that we've seen in both ethanol production and gasoline demand, we are still not back to what I would call pre-virus levels. We continue to struggle. So we've lost a ton of corn demand because of ethanol, because of the virus. We've obviously picked a lot of it back up elsewhere, feed and exports in particular. Brazilian soybean production is expected to be record large. Reuters did a poll of analysts. They expect the crop to come in at 132.3 million metric tons. That would be an improvement of 5% from last year's record of 126 million metric tons. So remember, it's very early in the season here. Weather, of course, has the ability to change that situation drastically. They've had a dry start, although they have some rain coming in early next week. And really for the next couple of weeks, I think that they're going to kind of normalize here in terms of rainfall. So still very much a big crop expected there. Dry weather here in the U.S. will continue across most of the U.S. Corn Belt and most of the plains. Now, you will have some hurricane-related storms that will bring heavy rainfall to some areas of the Mid-South, the Southeast, and even the southeast corner of the Corn Belt. But aside from that, I mean, most of the country is going to be very much void of rainfall here, really, during the next 2 weeks. I've got a map on my screen here of total expected precipitation through the 23rd of October, which would be two Fridays from now. And you've really got absolutely nothing expected for a lot of the southern plains. I mean, Oklahoma, almost all of Kansas, most of North Texas, and even most of the Corn Belt, less than an inch of rain expected in total over the next 2 weeks. So a pretty dry pattern remains in place. And this has multiple implications. I mean, the first one is for row crop harvest. This probably means that we continue at a very quick pace in regard to row crop harvest. In regard to winter wheat, I think that this is one of the drivers of the big rally in the wheat market here, is that we've got drought across a lot of the southern plains and really no relief in sight whatsoever. Fund traders continue to pile into the long side of the grain complex. It's really phenomenal what's happening here. At yesterday's close, the private groups were estimating funds to be net long 279,000 contracts of soybeans. That exceeds the previous record. I believe the previous record was 241,000. So we're way above that. So record long in the soybean market. They're estimating that funds are long net long 161,000 contracts of corn. That is something that very, very few people thought that we would see here in this 2020 calendar year. Funds estimated to be net long 60,000 contracts of SRW wheat, which is a fairly extreme long position relative to what we've seen the last several years. So I don't have the chart in front of me. I've got to put one together here, but I would imagine that the combined length corn, soybeans, and SRW wheat is one of the largest that we've seen ever, probably, or pretty close to it. USDA will release its weekly export sales report this morning at 7:30 Central Time. We've got another strong week of sales expected. Corn sales expected 700 up to 1.5 million. Soybean sales expected to be 1.5 up to 2.5. Wheat sales expected 250,000 up to 600,000. The corn market has acted very well. This is without a doubt the most pronounced contra-seasonal rally we've seen in the corn market since 2010. the market never really had a chance to rally in the spring because of COVID, because of the massive demand loss associated with ethanol. We're very clearly making up for it here. The trade expects a friendly report from USDA tomorrow, and I think that's the case for the corn market, the soybean market, and the wheat market. They're very clearly expecting a friendly report. As always, these reports are a question of what's priced into the market versus what is actually printed. And you've got to make the argument, I would think, at this point that we've got quite a bit of we've got a friendly report priced into the market to some extent. Spread action in the corn market has been I'll say it's kind of been frustrating, I think, for some people because, a lot of farmers have December sales, futures or HTAs on the books, and they'd really like to roll those forward and use the bins to capture that carry. And that carry has been very quickly disappearing from the market. It wasn't that long ago that we had 25 or 26 cents a carry from December 2020 out to July 2021. Today, we've got 16 cents of carry. And I think the function of the market here is to pull some of these corn sales forward. I think the general idea for most farmers here has been to sell soybeans aggressively. There's no carry in the bean market. We've got good prices, and store the corn. And I think the function of these corn spreads right now is to perhaps pull some of these sales forward, because I don't think a whole lot of corn is being sold for this time slot from, say, now through the end of the year. Soybean market again acting extraordinarily well into fresh multi-year highs again here today. Export demand still very good. We had another sale to an unknown destination yesterday. A lot of traders expecting, just like in corn, a smaller U.S. production number and perhaps a demand increase as well. We've got to keep an eye on this Brazilian weather situation. Wheat market, I think it's two things. It's dryness in the U.S. and also in the Black Sea region, and also this big rally in the row crop markets has pushed the market into some levels that we haven't seen in a while. I personally am perhaps a little bit skeptical of a wheat rally on weather here in October. It's extremely early in the growing season. There's still plenty of time for this wheat crop to bounce back, but that's what's going on here. We've got the cattle were up $1 yesterday, or close to it in most of these nearby contracts. Feeder cattle were up 30 or 40 cents. Not a bad performance. We've seen a nice recovery in the stock market. We had that big break a couple days ago when Trump said that he was kind of putting the stimulus deal on the shelf, and now that no longer appears to be the case. There's still maybe some sort of stimulus. So the Dow's up 170 points out of the cash open. S&P's up 15, bonds are up a little bit, U.S. dollars about flat, crude oil's up 72 cents, 40.67 in the November WTI. Remember, if you'd like some more information, visit my website, www.standardgrain.com. Go to that website, click on Grain Marketing Plan. If you'd like to know when, how, and specifically I am pricing corn, soybeans, and wheat throughout the year, it's broken down by crop year, and percentage. Check out that subscription service. You can cancel it anytime. There's no obligation whatsoever. Everyone have a great day. I will talk to you on Friday.